That's not a good look. Let's put on the. There we go. Hey, everybody. Welcome to the Lund Loop Daily Update. For what day is it today? Today is Monday, August 3rd, 2026. You have a good weekend? Hope you had a great weekend. I had it's all right. Wasn't the best weekend, wasn't the worst weekend. It's hot out here in Southern California. Not like hot, northeast hot, but it's like Southern California humid hot, which means like 82, 83. Anyway, let's get right to this market action because what a market we have. It's crazy action today. So, the on again, off again. We're going to war. We're going to peace. It's so hard to keep track of. All I know is that Friday we had some good action in the markets, and I was hoping we'd get a day or two of consolidation, but the market doesn't care what I want. We open gap up, and look at that big stick that clears Friday's high of day, and look at the spread on the 5, the 9, and the 20. Oftentimes that will tell you how strong the buying is, and we were not even able to close below the 5. That is the shortest EMA really until here, right? So what is that? That's 2 hours into the market. That's a lot of buying pressure. And then look, the 9 EMA. We don't even close below the 9 EMA until like 9. I have my glasses on here. 9. Yeah, almost 10 o'clock Pacific time. And then what happens with the 20? As we've seen many times before, 20 becomes support. In the case of a trend up day, it's touching the moving average right there, touching it there, and then just at the end of the day, dropping off a little bit below it. Sometimes it will be the limiter on a trend down day, but this is a beautiful follow-through day after Friday's action. Again, I would have preferred a couple days of consolidation, but, market doesn't care what I want. If you look at the Qs, this is good news too, because the Qs had been on a relative strength basis kind of weaker than the rest of the market, and we get a little bit different profile here, right? We gap up and we lose it, which a lot of people freaked out about, and then we reversed here. And this is not a morning reversal pattern because morning reversal patterns happen at the end of downtrends, but it is the same sort of U-turn, right? A flush down here. You don't get that on the morning reversal, but the point is it's a very U-turnish type of pattern. You get a little consolidation there, and then boom, we're back above the 9 and the 5 for quite some time, and the 20 ends up being the support for a trend up day. So all in all, a pretty good day, and we're going to see how good it was when we get to the indexes here. But before we do that, I want to do a little thought experiment here because last week, obviously, we had the big Leopold blow up. We saw that July was one of the worst months ever. It was the worst month ever for high beta Momo stocks. All the stocks around AI, right? AI infrastructure, energy, memory, all that stuff, chips. So the question is now, is the AI trade done? Because I think a lot of people are like, okay, last week Leopold blew up. A lot of these names are down 50, 60, 70, 80%. I'm still here. I'll just buy them because they're just going to go right back up to the highs eventually. Is that the case? I don't know. I mean, I have a natural aversion to any extremes. And for example, one of the extremes that I've been positioning against is the software is dead extreme, right? You know that for the last few months or so, I've been getting into names like Path, like IGV, like Palantir, right? I was in and out of Microsoft and Meta at certain points because I just thought that was too extreme, right? The narrative was too extreme. Now, you can get things that you can get narratives that are too extreme, meaning like they won't make sense or they won't play out that way, but stocks can react to that narrative for a long time. It's the market can stay irrational longer than you can stay liquid. And I would say the market, has been punishing software stocks for a long time, but we've now started to see them flip and the opposite has happened. All those AI names have come in. So the question is, did we get too extreme on the AI play, right? Was it too much of a Momo thing and it's over, right? I think there's a couple of questions to ask here. First of all, what AI trade? Like, are we talking AI infrastructure? Are we talking AI chips? There's different parts of the AI trade. So I would say for sure the AI trade as a monolith is over. I don't think everything AI related is just going to go boom. Maybe some parts of that will, but it's hard for me to believe it's all going to go back up. The other thing is, what time frame are we talking about? Are we talking about short-term plays in the AI trade? Are we talking about long-term? I don't think we're thinking about thematic trades where you can just go like this and say, I'm putting everything back into AI. I feel like that is kind of done. Also, does that question even matter? That's a great question to have at the bar in the corner after a few drinks when you're just trying to figure stuff out. But does it really matter if you're trying to figure out a trading strategy? I think a better approach is not to even worry, like, is it over, or is it not over, and let price tell us if it is. I think the one big caveat that AI bulls need to think about is what happens when momentum stocks break. Now, if you've been a Lund Loop subscriber for any amount of time, you know that I'm big on the 4 stages of a stock's life. This is something that Stan Weinstein talked about 30 years ago that was built upon by Brian Shannon, right? There's that accumulation stage, that's stage 1 where a stock is just going sideways. Retail's not in on it. Institutions are buying it, but they're buying it very slowly, so there's no real uptick. It's just going sideways in a base. Then you get the markup stage. That's when it starts to break and go higher. That markup stage can last 6 to 24 months. That's where you really make your money. Then you've got the distribution stage where it's trying to go higher and it can't, right? And you're seeing volume distribution at the top, and then you get the decline stage, and that's stage 4 where it goes down, and then it repeats again. I believe that when you get a momentum name that runs so hard into that stage 2, that markup stage, I think you can actually distort the 4 stages of a stock's lifestyle. And so when you finally do get that decline, I think a lot of those stocks can go to bed, can go to sleep for a long time, some forever, and become zombie stocks. Take a look at a stock like Plug. Plug was a momentum stock in the 90s. It was crazy. Then it went nowhere for 20 years. Then it popped back on people's radar a couple years ago. Look at Oklo. Oklo was ripping face a year ago, a year and a half ago. It's done absolutely nothing since. So I don't think the question is the AI trade over? I think the question is, be open to the idea that it could be over. Meaning, just because something's pulled back, you don't necessarily want to buy it because it could continue to pull back. Every little counter trend rally could be a fake out, or it could just go to sleep for a long time and your opportunity costs go out the window. So let's be clear. Not saying the AI trade is over. I'm saying if it isn't over, it's probably going to be a lot more subtle. You're going to have to be more of a stock picker. And I really think you're going to have to lean into technical analysis more instead of just kind of throwing a lot of money at a whole sector and saying it will probably go up again. All right, let's take a look at the indexes because they are a thing of beauty today. They really are. As I mentioned on Friday,